Everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us discuss today under hire purchase system, which are all the accounts we are preparing and what are the different situations where you need to calculate the factors which are influencing on the calculation of hire purchase payment. See, when you are paying hire purchase statement, account, we have seen we will pay half amount in cash and remaining in installment, right? So the installment includes principal plus interest so this will be paying on cash price. So we have a different situations or scenarios where when rate of interest will be given, cash price will be given and installments are also given, you need to calculate only the total interest amount you are supposed to pay. So this is very easy. But the second situation is where the interest rate and installments will be given, but you need to calculate cash price. The third situation is when only the installments are given, you need to calculate the cash price as well as the rate of interest also. And here you are preparing under the hire purchaser asset account, hire vendor account, interest account, depreciation account. These are the four ledger accounts you are preparing under the hire purchaser. And hire vendor, you are preparing only two books, that is hire purchaser account and the interest account. Now let us understand now how to calculate under the first situation the total interest amount in this video. Mr. Krishna purchased a car on hire purchase system on 1/1/20. The total cash price of the car is 4,50,000. So cash price is given. Payable 90,000 down. So this is our down payment 90,000. And three installments of 1,70,000, 1,50,000 and 1,08,460 payable. So installments, three installments amount is also given at the end of the first, second and third year respectively. And the interest charged at 10% per annum. So here you need to calculate interest paid by the buyer to the seller each year. So this is the format for calculating the total interest amount. So before understanding this table, we'll write the given information in the problem. So what all the information is given? Cash price is given. Cash price is 4,50,000. Okay. And down payment, initial payment. The initial payment she paid or Krishna paid is down payment 90,000 and installments are given. So three installments he is paying. The first installment is 1,70,000, second 1,50,000 and finally is paying 1,08,460. Right, and the rate of interest is at 10% per annum. Okay, now let us understand this table. Here, opening balance of cash price, installment, principal. This does not include the interest. Okay, only the amount. The part of the amount, the cash price amount is called principal amount and interest. Closing balance. Installments includes principal plus interest. But here only principal and interest you are showing separately. Okay, here is on when he purchased on 1/1/2020 purchase and is making payment installments every year end. So the first installment will be on 31st December 20. Second installment 31st December 21. The last installment will be on 31st December 22. Now, the opening balance is the total cash price here we are considering. That is 4,50,000. And the first, while purchasing, he paid a down payment. The down payment is 90,000. The principal amount is same, the down payment. Here there is no interest. So your closing balance is on opening balance, that is 4,50,000 minus this principal amount, okay, 90,000. So the closing balance will be 3,60,000. Your closing balance of the previous year will be opening balance for the next year. So this 3,60,000 we are taking as our opening balance. Now 3,60,000 is the opening balance and installment is given 1,70,000. So 1,70,000. Here you need to take only the principal amount. This 1,70,000 includes interest also. Now how you are calculating interest? Interest we are always paying on our balance. So balance was 3,60,000. On this 10% interest is 36,000. Okay. Now out of this 1,70,000 minus this 36,000 interest. 1,70,000 is total installment. From that minus 36,000 interest. So the balance, the principal amount is 1,34,000. 1,34,000. Now how we are taking closing balance? The opening balance is 3,60,000 minus the principal amount 1,34,000. So what is the balance? 2,26,000 is our closing balance. 2,26,000. Okay, now this closing will be our opening balance for the next year. So 2,26,000 and second year installment is given, that is 1,50,000. So principal amount how we are calculating on 2,26,000. So opening balance into 10%, 22,600. 22,600 is interest. Now minus 1,50,000 minus 22,600 is 1,27,400. 27,400. So closing balance is 2,26,000 minus principal is 1,27,400. 98,600. 98,600. So here 98,600 is our closing balance and the last installment is 1,08,460. Here, while you are calculating the last installment, you need to take the balancing figure is your interest amount. So what is the balancing figure amount? 1,08,460 minus 98,600 is 9,860, because here you are getting nil. So principal will come. If you minus this, because you have taken the balance here, you will get 98,600 only. You can check it out. 1,08,460 minus 9,860. 98,600. Right. So what is the total interest amount? The total interest is 36 plus 22.6 plus 9.86 is 68,460 is our interest. Total interest amount we have paid on our purchase of car. Okay, understood? Try to solve more questions and solve while watching this video also. Thank you for watching. Have a great day.